This is another market performance brought to you by Crypto and Down. So, if you've seen our other one, we took a look at the layer 1 solutions and blockchain, comparing this past week and then also comparing a 90-day look back window. So, if you're watching this, we are recording this and our dates run back a week from March 25th of 2026. So, the idea is we wanted to take a look and create a watch list of tokens that would be considered DeFi protocols. It's a broad definition, but we're going to look across these different tokens to compare their 7-day and 9-day performance, see what's happening with momentum, what is the volume associated with these tokens, as well as market cap and what's the ratio between the price and what can we expect in the future, and then kind of extrapolate based off of what's happened, news and things like that happening with these different protocols as well. So let's dive into it. You can also take a look at coin market cap. We'll probably share our watch list more in the future, make it a little more publicly available if you wanted to follow along with us. But the DeFi sector we're looking at, it includes things like Aave, Aster, GMX, Stargate Finance, Dolomite. So a lot of these things with the lens we're trying to look at and see where are stablecoins being used and try to create a watch list based off of the protocols on blockchain that have the most that's to do with stablecoin usage and activity. So let's take a look at our 7-day performers, gainers versus losers. River and Just. So River had I would say, pretty big gain over the past 2 weeks, as well as Just, JST. So Just is a protocol that is on the Tron blockchain. Check out our other video that we did to learn a little bit more about Tron and see its performance over the past week and 90 days. River as well is particularly another protocol associated with stablecoins that allows people to, let's say, find liquidity, earn yield, and it's interoperable across different blockchains as well. So you'll notice stablecoins will be a theme as we go through these different tokens, but River is, I think, one that's interesting because it allows for collateralization and maybe something that could be used with the new financial system. Depending on, we'll see what happens with passing of laws, the Clarity Act, that particular law they're trying to pass to give more laws and regulations around how to categorize these different digital assets, so to speak, and blockchains. The biggest losers, well, we can see Aster was down, Dolomite, Aave, Liquidity, and Towns were some of the biggest or some of the worst performers. So this could be a sign of short-term weakness in the DeFi sector. Aave and Aster are some of the bigger tokens when it comes to trading volumes. Aave being the one probably that has the largest price, but we can get a sense maybe and extrapolate that there is some short-term weakness here in this sector. But let's compare that to 90 days and see what we find here. 90-day performance, we've seen some strong gainers. So 5 tokens have exceeded 50%. We talked about River. So River, which is crazy, has been up 600% over 90 days. So it is one of the few tokens that is doing well over that 7-day span and 90-day span as well. We're going to take a look back from the beginning of this year. Up around 600% around 600% over 90 days. What could that be due to? It's an extreme outlier in this space, but it could be maybe it's being listed more on different exchanges, also hype as well, and it could also tie back to there's clear rules around stablecoins, so people are trying to figure out ways to earn yield in a place where you don't have to place your funds with a custodian, centralized custodian, and River allows that aspect as well. Stargate Finance has been also a big performer. It is one of those like infrastructure plays, also kind of comparative to LayerZero. So LayerZero, where we see River, Stargate, LayerZero are all across chain. So a pollination of across chain, the aspect of, you know, if you're a centralized player plugging into this system and wanted to offer your clients yield or a particular product that would work with some of the, like, let's say a stable coin that they were parking into your institution, you could maybe plug into a River, a Stargate Finance, a LayerZero as an aspect, as a back end to help lower costs, and it'd provide infrastructure as you sent funds across different institutions. The other aspect too to consider with LayerZero, it is actually one of the chains where Wyoming, they launched their stablecoin recently, their own publicly backed stablecoin. So the second, you could say, government entity, the U.S. government entity to launch a stablecoin, with the Tinian being the first to launch theirs a few months earlier. But Wyoming chose their LayerZero as a place where they would launch their stablecoin. So giving them options to work across different blockchains. So we're starting to see some themes here about cross-chain pollination, you know, interoperability, those type of things across blockchains and the protocols that allow stablecoins to be used that way. So let's take a look at Morpho and Just. So we can see they also have had pretty large gains. So these are yield and lending protocols listed. One is on Tron, and then Morpho, I believe, might be on Ethereum. I'll have to double check that. But we kind of get a sense here where we can see things that are allowing stablecoins to be used across different blockchains, provide yield and lending. That's where the long-term demand seems to be this year, so far into this year, and the trend that we should continue to watch as, you know, things may break down due to the war going around across the world, but kicked off specifically with what's happening with Iran. So let's take a look at our 90-day performance losers and corrections. So we saw established blue chips, DeFi blue chips, micro caps corrected sharply. One had a near total collapse, total collapse. So that would be the MYX Finance. It's down around 90% over the past 90 days. So there is huge volatility in crypto, but that is pretty concerning if you're taking a look long term. And let's see, this particular project is probably sitting at around 31 cents. I know I'm not really focusing specifically on what the price of the product is right now, but this is one of those products that is a non-custodial derivative exchange. So it enables perpetual contracts for virtually any existing token. So I don't know why that could be down, but Aster is also flat pretty much. Despite being one of the biggest losers 7 days, it's flat over 90 days. So it's held up strong this quarter, only down around 2.5% so far. If we take a look here, we can see the notable corrections. What's down 20%, Towns, Pendle, Aave, Liquidity, Dolomite, GMX. Not to get into too much detail in each of these specific ones, but they are ones that are utilized non-custodially, so allowing people to maintain access of their funds and to be able to provide, you know, access through stablecoins to do different things, whether that's earn yield or do lending. These are the ones that have seen the most dramatic loss over the past 90 days. So what is a 90-day analysis for? What are our strong narratives, strong performers? River, we talked about that one, has the strongest performance, pretty much dominating. Tied into infrastructure and lending. The word we'll hear a lot: interoperability, bridging. Now there's debate about how safe an aspect of bridging is, whether there's a lot of risk associated with bridging between different blockchains. But um, you know, LayerZero, Just, Morpho, River, all have done pretty well. So established DeFi names that are correcting and are down over 90 days: Aave, GMX, and Pendle, seeing 20 to 28% drawdowns over the past 90 days. Although it's nothing to scoff at, it's worrisome. It isn't a 90% collapse like we saw with some other tokens, but it's something to be aware of. A correction there. So you could say while some have been strong performers over the past 90 days, maybe it's due to better technology, different adoption across a wider variety of clients, and that's leading certain ones to perform better. But there's definitely a divergence over 90 days over some of the established blue chips and the newer up and comers when it comes to protocols that allow lending and yield. So overall performance, to get short term, 90-day, River stands out as having best performance over both sectors, followed by LayerZero. We can't just sit here and say that all of DeFi is going to perform well or has performed well over the past 90 days. So if we wanted to extrapolate that over the next 90 days, 30 days, or even weeks, we'll have to sift through and pick out and see what are the winners? Why are things performing the way they perform? So why is there a divergence between ones that allow bridging between different blockchains, and why are some performing well, essentially? So we'll have to keep an eye on this and see, and do a little breakdown. Getting towards the end here, if we want to take a look at liquidity, volume insights, we can see Aave and Aster are dominant in that 24, 7-day, and 30-day volume figures. So large market caps for these. The low volume one that have made elevated risk: Liquidity, Dolomite, Towns, GMX. Some of the smaller caps, not a lot of trading activity. Those were down. But that is not to say that we can write them off. We'll keep an eye on them to see how those numbers perform volume-wise and measure price to volume, and just get a sense of their overall health. Sustained engagement over 7 days and 30 days. It looks like 4 to 5 tokens we were looking at had like a strong performance there. As institutional players, we say come in, we can get a sense of what's the actual performance there. Quickly look at market capitalization view. You can check out these specific numbers on CoinMarketCap. I just wanted to just take a look and break out these 14 tokens to get a sense of. We can compare price. River is down towards the bottom, as is Just when it comes to their market cap. So market cap not necessarily something that we can just look to and evaluate and estimate for how price is going to perform. But that being said, that can get a sense of, we can see the bigger players: Aave, Aster, Morpho, LayerZero, and then kind of break it down and see when it comes to volume, price, and doing ratios there, which ones are strong, which ones are gaining, and just compare that over our time frames. So we can say here, River's appreciation without dilution. So 493 million market cap with a 600% 90-day gain. What can we get from that? Maybe price appreciation is coming from actual genuine demand for the product, not necessarily manipulation. Small tokens with that micro cap risk profile under 30 million, like Towns and some of the others, GMX, very speculative, highly speculative. There's a little speculation aspect to all of these, but we actually can break it down and understand what's less speculative, what's more in demand, what's had its actual stability, and kind of compare those and adjust based off of what our risk is. So momentum leaders, River, Stargate, LayerZero for 90 days, the past 3 months of the year, strong performers. River had the biggest short-term standout as well. And then we take a look at Aave, GMX, Pendle, some of the blue chips that are correcting and have had lower 90-day performance. Could be that people are turning from these and looking at River as a better option for them as well.